Hello, my name is Jeff White, and we'd like to welcome you to our third quarter 2024 market outlook. Some of you joining us may be our clients and others are not. Either way, we hope you find value in the market viewpoints from our advisors here at Capital Strategies Group. As certified financial planner practitioners, we take an unbiased fiduciary approach to the way we help our clients. We're constantly keeping an eye on economic conditions and staying updated through various resources. We love to share our insights with you, but it is important to note that just because we're discussing these topics doesn't necessarily mean adjustments are warranted in your portfolio. News headlines can sometimes create a sense of urgency to take action, but it's important to recognize that not every situation necessitates immediate action or intervention. One question we've heard a lot lately from clients is, what impact will the 2024 elections have on my portfolio? While presidential elections can affect the direction of public policy, they usually should not dictate your investment decisions. Research suggests there is no statistical relationship between the performance of a portfolio in a presidential election year and non-election year, as shown in this chart. As you can see here, on average, the annual compound return of this 60-40 portfolio tends to be slightly higher during election years than in non-election years. Research has also shown that in months leading up to and following after an election tends to be on average some of the lowest volatility months in the market compared to other times of the year. You might also be wondering whether the outcome of the election will have a certain impact on the markets. The reality is that we could look at this so many different ways and from so many different angles. There is simply not sufficient historical evidence to suggest that the markets or even certain industries will perform better based on election results. All of this is really just a long way of saying that we generally don't make large adjustments to investment allocations based on the political party of the president or on the party that controls houses of Congress. Presidential elections are events that generate lots of headlines, but they should not sway you from your commitment to your financial plan. The Fed's approach continues to focus on a long-term strategy to control inflation, albeit at a slow pace. In the past, our expectation has been that the Fed isn't likely to cut rates at all this year. Data from the last couple weeks, however, has economists believing rate cuts might come a little sooner, possibly as soon as September. However, we still believe rate cuts will be slow and that the Fed will be cautious about rate cuts. We know there are many areas of the market that are influenced by the Fed's decisions. One of those is the impact to mortgage and other borrowing rates. We likely won't see a meaningful drop in mortgage rates until the Fed makes some progress with bringing interest rates down. We also expect that there will be a lag, so we might not see decreasing mortgage rates until we are well into next year. But there is a positive side to higher interest rates. Higher interest rates cause more interest expense for borrowers, but for savers, higher interest rates means more earnings on your cash. Many high-yield savings accounts, money markets, and CDs are providing a 4.5% to 5% interest rate right now. This provides a great opportunity to grow your cash and helps your savings work harder for you. Fixed income yields are also higher than they were 4 years ago, which is an advantage to bond investors. Part of successful investing is understanding what you can control and letting your emotions take a back seat to the financial plan we have helped you put in place. By maintaining perspective, discipline, and a long-term outlook, you can sustain progress toward your financial goals. We appreciate you taking time to join us for this third quarter market outlook. We are always watching what's going on in the world. You can trust that we will help you navigate the financial landscape that can sometimes feel complex.